Good morning. This is Josh Hayes with Hedge Plus, and here's today's market monitor. Today's headline is U.S. and China make major strides towards a deal, but the looming USDA supply and demand report might temper a little bit of the enthusiasm. It's kind of a bummer on the timing of I don't know which one you want to put it on, either the report being today or the fact that the U.S. and China made some major agreements over the weekend, but if there had been maybe a little bit of a gap in between and the market would have just been able to trade on the progress made between the U.S. and China, we might see, I think, perhaps a bigger bump than I think we're going to get, at least from what I'm seeing on overnight. Soybeans are definitely getting a bump, but it's pretty much limited to that right now. And that's a lot of that is because the world and the industry is expecting major acres and a new crop carryout of over 2 billion bushels of corn, and that's obviously going to hold back some of the enthusiasm beyond anything having to do with soybeans. But the U.S. and China, nonetheless, have agreed to lower tariffs on one another. China is lowering its tariff on the U.S. to 10%, all the way down to 10%, while the U.S. is bringing theirs all the way down to 30%. It's a 115% reduction by both sides. One of the aspects I like about it is the fact that China is acknowledging the massive trade imbalance by agreeing to a level that is lower than what we have on their goods. So that 30-10, I like that acknowledgement, and I think things will make quite a bit of progress here over the next 90 days. Get a deal finalized. It should include lots of U.S. agriculture. China's need for agriculture outside of what it produces itself is growing as their drought continues. They've started to buy wheat. Last year, they bought very little wheat, or quite a reduced amount, but they are picking up their wheat purchases right now. Initially, these purchases are going to Australia and Canada. I think that will take a little bit of a change now with the U.S. having the cheapest wheat. There's no reason for them to avoid buying from the U.S. if true progress is being made. But either way, the fact that they are forced to buy more wheat than they were intending to because of their own weather issues, all these pieces get moved around. If Australia and Canada are selling wheat that they otherwise wouldn't have been selling, it just drives the prices up there and sends other countries to here. So no matter what China does, whether they buy from us or they buy from someone else, it's a finite world supply. And if their production is dramatically reduced, it's going to lead to higher prices of wheat and potentially corn down the line everywhere else. It's just a chain reaction that's inevitable. On the bullish side for the United States, strong export pace and anticipated stronger ethanol demand should lead to reduced old crop ending stocks from the USDA today. But of course, on the flip side of that, everyone's concerned that the amount of acres and the good weather and planting that we've had so far is going to lead to a projected 2 billion bushel new crop corn carryout from the USDA today. So we'll see what happens there. If we get a number below 2, that could be a positive sign. Taking a look at the weather, Midwest dry, Southeast continues to get heavy rain. The most concerning areas for the U.S. right now are the northern plains. While rain likelihood is increasing for the Midwest and the Great Lakes regions over the next 10 to 14 days, something that wasn't originally forecast. We thought we're looking at a very hot and dry May for these parts. The rain potential is increasing there, but it's not really increasing much in places like Nebraska, parts of Kansas, the Dakotas, although I did see there's a fluke chance in extreme northwestern parts of North Dakota of snow about a week to 10 days from now. But the dry areas that the most extreme dry areas we have right now are expected to still remain dry. In Canada, crop regions are still dry for the next 10 days. They're already in a critical point. It's led to them making purchases they otherwise would not have made. And we'll have a trickle-down effect from that, and there's still no real relief in sight. Same goes for Mexico. Drought remains for another 2 weeks there. That's going to increase their dependence on purchases from the U.S., something I expect to have happen to show up here soon. And then in Argentina, not too great of a concern here, but rains continue to slow the harvest there, and that could lead to some price pressure as soybeans from Argentina are slower to come to market. Taking a look at the overnight, as you can see, soybeans up about 15 cents as of 5 a.m. this morning. That's all, no doubt, because of the progress made with China. Corn not benefiting quite as much, up just a couple cents, and basically even from where we were on Friday morning. Beans, on the other hand, are up about 20 cents since Friday morning. Meanwhile, wheat down 11 cents since Friday morning, although as I look at the board now, it looks like wheat has pulled about even on the overnight trade, so right about where we finished the day on Friday. But this market's down about a full dollar since the highs that we made in February. The managed money, the funds continue to just drive down this market and are not taking into account any weather right now. Even with China having their issues and picking up the purchases, it's just still not showing up in this market. Obviously, I think the market have managed money is convinced that demand for wheat is somewhat permanently decreased, and we've just got too much in the form of stocks to work through before it's going to account for any kind of weather concern. So we'll see what the USDA brings us today. That report come out at 11 Central. We're looking for main number. We're looking for is what they'll project for carry out with corn for new crop, and we'll see what we get. Hoping for perhaps numbers below 2 billion bushels. The USDA does not speculate on trade deals. It only goes with the information it has at hand. So I think the focus right now for the USDA will be, what do we expect for acres? How's weather looking right now? And we'll adjust based on trade deals to come. So a lot of the impact of pending trade deals and coming trade deals is going to be felt throughout the year instead of necessarily in one major point or of time, such as with what we're getting with soybeans right now. That's all for today. Hope everyone has a great day. Good luck with planting out there, and we'll have the USDA report fully covered here at 11 o'clock. Talk to you again tomorrow. Thanks.